Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 14th, 2010. Well, the markets are in rally mode today on the back of Intel's earnings yesterday after the close, JPMorgan's earnings this morning, which were fantastic as well, and ultimately some decent economic numbers, retail sales, and CPI data this morning at 8:30 a.m. Eastern Time. Overall, the market started out up to the upside, pulled back slightly before revving higher on lighter volume towards the afternoon session. Now, again, it does look like we will do better volume than yesterday. So far, every day this week, going towards the end of the week, which is, again, options expiration, we have seen a little increase in volume. But for the most part, you have to say to yourself, volume is still very, very light. There are key components of this market that are not participating. And again, you'd have to look to the institutions because they're the players that create the volume. So volume, for the most part, again, on the light side today, we've only done 108 million on the SPY, and it continues to be an interesting kind of theory as to why the institutions lack chasing this market. And again, it doesn't really surprise me. We all know the market's in a little bit of a bubble at this point, but again, it continues to go higher without institutional help. At least for the majority of it, there is no institutional backing. Now, looking at the technicals, guys, we came up here, we took out the 52-week high of the SPY. That was the close yesterday. You can see we gapped above it. Once you gap above a level, I often use the river theory, all right? That's the In the Money Stocks river theory, which says to you, if you have a resistance area, think of it like a river or a stream, a fast-flowing stream with lots of slippery rocks. You don't want to get caught in it by crossing it because you might slip and hurt yourself or drown. So what ends up happening? What's the easiest way to get over that? The answer is to jump over it or to take the bridge. Here it is. Here's your close. Here's your river right here going across. Here's your close. Here's your bridge over. You just jump across, and there you go. Once you get that, oftentimes the markets will continue to move higher. It's a theory that works out very, very often in the markets. And again, it's understood to mean the easiest way to cut through resistance is to just jump over it. All right, so remember that. That's what the markets did today. You can see, again, gapping up here, pushing a little bit, then pulling back. You had to move down just about into that high level, almost back to the river, as if you came back to the river just to take a drink, and then off to the races you went. Nice little tail on this candle, signaling upward momentum. Also, 1, 2, 3 tails. You guys know, part of the research center, that that's a key signal that we utilize as well to tell us the markets very likely will continue to head higher. Again, as we dip down here, folks, just again note that pivot high from yesterday and from 2 days ago. That's exactly what you came down into, and again raced higher. We came all the way up to the 120, almost to the 121 level. I have a key level of resistance at 121.15 that you should be watching. It's really at a break of the even number of 121. That's right now the major resistance area. As you can see, we came back in. We had Beige Book reported about 20 minutes ago. We fell back into that with a 1, 2, 3 bar pullback, but right into the 20 moving average. And at that point, the market got a nice boost on the Beige Book as the comments coming out from the Fed in the Beige Book were generally on the positive side. All right, that is where we currently sit. Now, what's the stocks leading today? Obviously, Intel, guys. Intel with some monstrous earnings, very impressive earnings yesterday after the bell. Let's punch in Intel's chart. As you can see, Intel really gapped up here, made a good attempt earlier, but has really consolidated sideways. Intel, believe it or not, is only up 67 cents. It is not a huge move, but if you look at your daily chart on Intel, you can see very clearly that the move in Intel since February 5th low has been ginormous. Therefore, it needs a little bit of a break, it seems, and again, it is taking that little bit of a break here by stalling out on the intraday off the gap up. All right, the next stock we want to take a look at is JPMorgan. What a move on JPMorgan today. As you can see, same type of chart all the way down to the 37 level at the February 5th lows, and since then it's just been a one-way move all the way up. Really a move up today with nice proportions, up $1.79, $1.80, trading up beautifully on the day. And again, that's coming into a very beautiful little resistance. I would say the $50 level would probably be a good solid resistance on JPMorgan, just understanding how even numbers work and therefore all of that key data that will come along with it. All right. Next up, what do we have, folks? Goldman Sachs. Goldman Sachs is following JP Morgan. If we flip to the intraday chart here, you can see very clearly, here's your intraday chart. Goldman trading near the highs of the day. Bank of America up 71 cents. That's also a fantastic move. Morgan Stanley up 80 cents, and Wells Fargo trading up about 90 cents. So big moves on the financials today, folks. They are the leaders. Definitely the leaders. Technology is also helping today as well. The one lagging sector is the kind of the oil industry, folks. The Chevrons, the Exxons of the world. Chevron is up 7 cents, and Exxon is actually negative on the day. Here's your Exxon chart, folks. So you can see that those stocks are being left behind. Money is rotating out of them into technology and into financials. All right, now again, flipping over to Intel type related stuff, we see Amazon having a good day today, up at $3.73. Baidu is having a very good day, up about $11 and change, and Google up just 41 cents. Google has earnings on Thursday, so keep that in mind. Research in Motion having a good day, up $1.15, and Apple, of course, having a good day. Why would Apple not have a good day? And again, if the markets are strong, chances are Apple is involved there, and that is moving to the upside beautifully as well. All right, so that's where we stand right here on the hardcore stocks. Looking at the technicals, let's flip back to the SPY, cover a few things. You can see clear as a bell here, a little bit of a channel. Blue line and then green line here underneath. That is a channel, folks. You are continuing to hover in this channel. It looks like the market, ever since the low put in yesterday, has stayed in that channel and continued to move up. The S&P did cross the 1,200 mark today. That is a very, very important part, kind of like the S&P crossing the 11,000 level. Now the NASDAQ wants to get above 2,500. So 1,200, 2,500, and 11,000. If we get 4 more points on the NASDAQ, you will cross all these major levels. Very important, guys, for this market on a technical level. Also thinking for the psychology of the market to get above the 1,200 and the 2,500 on the NASDAQ after getting over the 11,000 level on the Dow could be very significant. It could also be somewhat of a contrarian indicator, which we need to follow very closely as we're looking for a move down and then a confirmation should that happen. And again, until you get confirmation on a move down, which is a key in the money stocks theory as well, and thing put into play, you do not necessarily know this market's going to pull back. So you have to continue to look at this market and say they can continue to prop this thing up as long as volume stays light and as long as there's no confirmation signal to the downside, they can keep this thing up. So always remember that, folks. Err on the side of caution until we get that confirmation signal and continue to watch the technicals very clearly. If you're looking for an intraday sell signal, if we were to get below this lower channel trend line, that would be your line to watch. All right, that would definitely be the line to watch at that point if we ever could get below there. Otherwise, if you come up to the high end of the blue line, that could be a good shorting intraday opportunity as well. All right, folks, that's all for today. We'll talk to you soon. Take care.